What's up, trading bros and sisters? Welcome to the trading floor. I'm Wildcard, and today we are running the pre-game show for one of the wildest Wednesdays this market has set up in months. The market had a full identity crisis yesterday. The SPY tried to gap fill at 710. Trump posted at 10:51 in the morning that extending the ceasefire was highly unlikely. Everything reversed in about 15 minutes. The Nasdaq 13-day win streak ended. VIX climbed from 17 to 19 inside a single session. Central Command turned back 27 vessels in the Strait of Hormuz. That was Monday. Here's the frame. Monday wasn't a sell-off. Monday was the market finally, fully realizing that Wednesday is real.
Quick reminder before we get into it, nothing we say here is financial advice. We're two guys reading data that might be wrong by the time you hear this. Do your own research.
And speaking of wrong data, I almost came in today with stale numbers off the morning board. Again, TB caught it before we went live. I'll tell you exactly what happened in the system segment, and I promise it's worth the wait.
Let me give you the structural read on Monday. The SPY hit a dark pool rejection at 710.21. Institutional hands said no at that exact level, not nearby, at that number. If we break lower, the gap demand zone is 699 to 700. That's the floor. Lose that, and the next clean support is a long way down. Here's the context that matters, though. April is already the third best month for the market since 1950. Only April 2009, after the financial crisis, and April 20 after the pandemic were stronger. This sell-off might be healthy. The tape wasn't crashing yesterday, it was correcting into a known event. That distinction matters for how you position into today.
And that event has 3 parts. All of them land Wednesday. Part 1. The Iran ceasefire expires Wednesday evening. Trump didn't say, "We're working on it." He said, "Highly unlikely to extend." Those are very different sentences. Part 2. Vice President Vance is in Islamabad right now. Ken confirmed second-round talks are happening. But the Strait of Hormuz stays closed until a deal is signed, not until somebody sits at a table. Oil at $86 is the market betting on blind faith. No plan B. Just hope that something gets signed. Trump just publicly told them that's the wrong bet. I've been running this through 3 frameworks since Monday. Demand destruction. The global economy slows. Oil demand drops. Supply substitution. Alternative shipping routes. Strategic reserves fill the gap. Or, option 3. Blind faith with zero plan B. $86 oil is option 3. And the president disagrees.
Part 3 of the triple binary is Tesla, ticker TSLA, reporting Wednesday after the bell. $392 isn't just sitting at support. Tesla broke below the $400 200-day exponential moving average. That's not holding support. That's through it. When a name breaks its 200-day exponential moving average, the burden of proof shifts. Earnings now have to rebuild the thesis, not just beat the number. And there's a real demand headwind this quarter from the boycott tied to Musk's work with the Department of Government Efficiency. That's showing up in the data, not just on social media.
The guidance call is what matters. Does management reaffirm the electric vehicle thesis, or do they go quiet on it?
Here's why the VIX is at 19 while the index barely moved. The options market cannot simultaneously hedge a ceasefire collapse and a Tesla miss. Those are 2 separate tail risks priced into the same week. That disconnect is information.
Now, I had Raytheon and Halliburton in a later segment, but TB pushed me to move them here. It was right. These 2 report the day before the deadline. And their guidance is the market's own prediction on Wednesday's outcome.
Raytheon, ticker RTX, makes the missiles. If they guide up on defense demand, the company deploying capital based on what they expect is telling you the conflict isn't ending Wednesday. That's not analysis, that's their money talking. Halliburton, ticker HAL, drills the oil. If they guide down on exploration activity, oil producers don't believe high prices are sustainable. They're not drilling for an $86 environment they expect to last.
2 companies. Opposite sides of the same war. Both reporting the day before the deadline. The guidance language matters way more than whether they beat by a few cents.
CAPEX decisions and forward bookings can't be massaged the way quarterly numbers can. Watch those specifically.
Everything we just laid out is the Wednesday frame. But at 4 in the morning today, Apple dropped something that lands differently because of everything we just said. Tim Cook is stepping down as chief executive of Apple, ticker AAPL. He moves to executive chairman starting September 1st. Jeff Turnus takes the top job. On any other week, that's the lead story. This week, it means something more specific. Cook wasn't just running Apple. He was America's best corporate diplomat. Personal relationships with Chinese leadership built over decades. That is why Apple got tariff exemptions nobody else got when everyone else was scrambling. The question is, who replaces that channel in the middle of the worst United States, China moment in years?
Turnus isn't an outsider. He designed the M-series chips. His fingerprint is on every Apple device made in the last 4 years. 25 years at the company. He's 51 years old when he takes the job, the same age Cook was when Jobs handed him the keys. He is an exceptional products person. That's a different skill set from a diplomat. And this is a very different moment. Cook staying as executive chairman softens the gap. He'll still be in the building for certain conversations. But chairman and chief executive officer are different cards when you're sitting across the table from policymakers in Beijing.
Turnus can probably run Apple. The question is whether the people Cook built relationships with recalibrate when the title changes. That risk lands during the worst possible window.
Agreed. Okay, Powell Day. The Federal Reserve cannot cut rates right now. Supply shock inflation from $86 oil and tariff pass-throughs are still running hot. Cut into that and you reignite price pressure. They also cannot hike. Not with VIX at 19 and a war deadline 24 hours out. Market fragility is real. Neutral is the only card available. What does neutral sound like when it's literally the only move you have? Watch his language on data dependent. If Powell leans into that phrase harder than usual, he's signaling the Federal Reserve is also waiting for Wednesday. Even the Fed doesn't know until the ceasefire question resolves.
United Health, ticker UNH, is the wild card for the Dow this week. The noise around it is loud. Keep an eye on it, don't bury it, but today it hasn't earned more than 30 seconds. Now, the AI story that somehow got completely buried. Anthropic committed $100 billion to Amazon Web Services over the next decade.
Amazon was up 3% after hours. The $5 billion investment number got the headline. The $100 billion cloud lock-in is the actual move. That's a decade of AI compute anchored to a single infrastructure provider.
And on the same Monday, the Defense Production Act got expanded to cover data centers. The government is now treating AI compute as national security infrastructure. Same legal framework as weapons manufacturing.
AI capital expenditure is becoming a geopolitical asset class. That framing shift matters more than any individual headline number this week.
Both stories buried under the ceasefire trade. They'll matter more once Wednesday resolves. All right, systems time. And I have to be straight with you about what almost happened this morning. I came in thinking I had TB's wave trader data from the morning board. I was ready to tell you his system dropped positions and the win rate fell. TB corrected me before we went live. That was stale pre-market data, not the live close-of-day numbers. Verify the timestamp before you read the number. Lesson learned. Again. My TFT is 95% cash heading into the binary. 2 remaining positions. Johnson Controls International, ticker JCI, and Claw Corp, ticker KLAC. Both in profit stop territory. I lock the gains even if I get stopped out tomorrow. That's the discipline. I don't need a perfect call this week. I just need to not blow up on the wrong side of an unknown outcome. Sometimes 95% cash is the position.
My wave trader made a completely different decision. I have 5 positions right now. My system ran the 3:30 pipeline on Monday during the sell-off and added exposure. It entered ServiceNow, ticker NOW, Wolfspeed, ticker WOLF, and Energy Fuels, ticker UUUU. The VIX rate of change at entry was 0.7. My system classified that as noise, not fear. The algorithm read it as a dip signal, not the beginning of a breakdown. I'm sitting on $1,750 unrealized across 5 names. 36% cash. The most exposed I've been in over a week.
Hold on. Let me make sure I have this right. I went to 95% cash. Your system went the other direction and added 3 positions during the same sell-off. Same VIX. Same tape. Play same day.
2 independent algorithms. Same data. Opposite conclusions.
That is way more interesting than if we'd agree.
Is this genius level dip detection or picking up pennies in front of a steamroller? Wednesday tells us. My system saw 0.7 VIX rate of change and bought. I own that call going into tomorrow.
And that's the real storyline for Wednesday. Not just the ceasefire. Not just Tesla. Not just Powell. It's 2 systems with no connection to each other, different models, different inputs. And they looked at the same Monday sell-off and made opposite calls. One of them is right. Wednesday decides which one. Here's what we're watching tomorrow. The SPY at 699 to 700 holds or it doesn't, and that's your structural read for the week. Raytheon and Halliburton guidance, pre-market, read the language, not the headline number. Tesla after the bell. Watch management's commentary on the electric vehicle thesis, not the beat or miss. In Powell's testimony today, any shift, harder or softer than data dependent, is worth writing down. The market has been sitting in this trade for days now. Tomorrow it finds out if it's been bluffing. We'll be here to call the hand. See you Wednesday, trading floor. Keep your powder dry and your timestamps verified.